Hey everybody, I hope you guys are having a great day. So, welcome to the next episode of the Pip Catcher's Mentorship for the Pip Catcher Expeditions. Um, I think this will be episode 9. Um, and today we're going to be going over manual intervention, implementing specific times, and understanding optimal trade entry, other known as OTE. And remember, guys, trading advanced concepts without a foundation is gambling. Okay, so make sure you guys watch the videos that I had posted before, understand those, come back to this video, and this will make so much more sense. Okay? Now, what is manual intervention? Manual intervention is anything that has to do with humans putting manual input into the market, which will inevitably cause manipulation towards traders and or boosting the algorithm's directional approach. This includes news events, which would be the major ones, which are FOMC, CPI, PPI, NFP, and employment. This also includes session/kill zone opens, so equity open or London open, or even New York PM open. This includes macro times, and this also includes the Judas swing, other known as the manipulation move of the power of 3. So accumulation, manipulation, distribution, that is the manipulation move. Now, manual intervention is very important to understand, okay? Because if you guys don't know when manual input is being occurring, you guys won't know when liquidity will be taken. You also won't know when smart money will be involved at the same time. Okay? So understanding this is very important. Now, prioritizing important times. Okay? So 12 a.m. is called the daily open. During this, when it trades above it to go bearish. When it trades below it trades below it to go bullish. Alright? So this is known as the daily open, which is 12 a.m. Eastern Standard Time. This is the true opening of the day. So if you ever go to the daily candle, it's never going to open at 12 a.m. Never is. The true open of the daily candle is at 12 a.m. Always is. Always will be. Okay? Now, the equity market is from 8 a.m. to 5 p.m. So this is understanding when equities will have a majority of volatility. So in the equity market, so during the market open, this is between 8 a.m. and 5 p.m. This is when equities, so futures, will have majority of the volatility. Now it can have volatility during London session, but majority of it is going to be during New York session, which is between 8 a.m. to 5 p.m. So New York AM and New York PM. Pre-market for equities is between 8 a.m. and 9:30 a.m. And this is when to start your analysis and when to find your daily bias. But be aware when trading because of lower volume. So before market open, so this is called pre-market, this is when you're going to start forming your setups and also finding your daily bias for the day. Now, in this time, your volatility is going to be lower than usual. But that's because the market hasn't released all the volatility because of market open. Market hasn't opened yet. So it's important that you understand when these times are. Okay? News embargo is at 9 a.m. And this is when volatility and manipulation will have an increase in probability because of manual intervention from a release. So news embargo is anytime you have those news events, and usually they're going to be at 9 a.m. and they're going to release. And when that happens, when news releases, right, that's going to be when manipulation will be occurring. Okay? So whenever you see those news events and you see it being released at a specific time, you're going to understand what could possibly happen, what you have a higher chance of getting, which is manipulation and getting liquidated. And you want to be aware of that. And finally, you guys want to understand the London Kill Zone Open and Equity Open, which is at 3 a.m., which is London Kill Zone Open at 3 a.m., and Equity Open, which is at 9:30 a.m. And this is for all equity markets, 9:30 a.m. And this is when the Judas swing, other known as the manipulation phase, will usually occur. Okay? So make sure you guys write that down and understand what that is. Now, we're going to go over what optimal trade entry is, other known as OTE. So OTE this is where the market will have a retracement phase right after an expansion/distribution phase. You will be using the Fibonacci retracement tool and marking out the setting 0.618, 0.705, and 0.79. In these points, the market will retrace into this area to then reject into continuation. So what does that mean, right? So you're going to be using these points. So if you're on your trading view and you click on the settings for the Fibonacci retracement tool, you're going to put all these settings in. You don't need to put -27 and everything else should be fine. So -27 you don't need. But you're going to put all of these in, okay? You also don't need the 0.62 minus 0.62. You can if you want, but you don't have to, okay? But 0.618, 0.705, and definitely 0.79 are the ones that you want, okay? So that area of those 3 points, between those 3 points, is going to be known as your optimal trade entry. Now, you would draw this, like in this example, if it's from a low to a high, or a high to a low, sorry, you're going to be drawing it from the high to the low of the range, which would be from here to here. Market will retrace back into that 3 decimal point range and then reject from that point. And in that point, you're usually going to want to find some type of PDA. So in this example, we have a SIBI here. Market taps into the SIBI, then rejects lower. Okay, so usually you're going to want to find some type of PDA that it's going to reject. Okay, so the optimal trade entry is another confluence or confirmation that you can use with your guys' setups. Okay, now you cannot use the optimal trade entry if you do not have a distribution phase. If there is no distribution phase, you cannot use this, as it is a continuation tool, okay, for retracements. Okay, so retracements are for continuations, and this is for retracement. You cannot use these for distribution moves, okay? These are for retracement moves, okay? So what I mean by that, if you do not have a run on price, or you do not have a price leg, you cannot use the optimal trade entry because it is not valid, okay? So you see a lot of these people, a lot of these retail traders, they're using the fucking fib tool and they're using the 0.618 like fucking all the time, right? That's fucking retail. They use it on the manipulation move. They use it on the distribution move. They use it also on an expansion move after a fucking reversal or fucking whatever, you know? They use it on every single move for a fucking retracement. You don't use it. You use these specifically only on distribution legs, okay? Only on distribution legs. When you have a run on price from high to low or low to high, you use it on those. You don't use it on reversals. You don't use it, or you can use it on a reversal, but it has to be an expansion reversal, okay? It needs to expand in the opposite direction. Also, you do not want to use it on the manipulation phase. You will use a different type of tool, and that is called standard deviation targeting, other known as projection, okay? So, for the optimal trade entry, you will use these on distribution legs, okay? Now, how do I see news events? You can see news events on multiple platforms such as Forex.com, MyFXBook Mobile, which is on your phone. It's an app you can download. DailyFX.com and GoldmanSachs.com, as well as a bunch of other sites. But these are the main ones, okay? The news event will range from yellow, orange, and red folder news in order of how low to high impact the event is. This will also tell you what time the event will start, okay? So if you look at this picture, this is a picture from from forexfactory.com, okay? So, as you guys can see, on the left side, you have the date. This is when those events will be occurring. To the right of it, you will have the time frame, or the time that it'll start. And right when it starts, that time, that's when it's going to release. And you can see it on the live charts. Right when that thing releases, you're going to see the difference in volatility with that candle. Next to that, you will have the currency that it's related to. So you see you have EUR, which is related to the euro. You have JPY, which is related to the Japanese yen. And you also have GBP and you have USD, which is related to the Great British Pound and the US dollar. So those are all related to which currency that news event is related to. To the right of it as well, you have the red folder and you have the orange folder. I had disabled the yellow folders because those are lower volatility and less high impact. The higher impact will be the orange folder and the red folders, but majority will be the red folders. So the red folder news is the ones that you want to watch out for. Orange folder you can watch, but you don't need to pay attention to it as much as red folders. And then to the right of that will be the actual news event, okay? So those news events is going to be the news event that you want to pay attention to. And remember, the big ones that you want to pay attention to are CPI, PPI, FOMC, NFP, and unemployment. Those 5, okay? Those are the 5 that you want to pay attention to, okay? So understanding when these news events occur and how high impact they are will affect your trading in a good way, because you are going to know when these news events happen. And what happens during news events? Manipulation. What's the purpose of the daily open? We can use this as an indication to know which direction the market is trading in. If it trades above open price for manipulation, we can anticipate bearish momentum. If it trades below open price for manipulation, we can anticipate bullish momentum. The Judas swing will usually give us this indication at 3 a.m. and 9:30 a.m. So in this picture, we are on a Forex market, okay? And on Forex, the open is at 8:30, not 9:30. But I trade futures, and I'm teaching you guys majority of you guys how to trade futures, so future indices. And equity open is at 9:30. So New York AM open is at 9:30, not 8:30. So in this case, we would be measuring out 12 a.m. and 9:30 a.m. So if the market trades above 9:30 and 12 a.m., that will be the manipulation move to go higher, to then in return drop back lower. And when we drop back lower, that'll be the distribution leg. And once that distribution leg is formed, that's when we can use optimal trade entry to measure from that high to that low to measure out where the retracement will be. And then we can find it either like a breaker block, we can find a mitigation block, we can use a fair value gap, we can use any type of PDA in that area for a retracement to then continue lower. And that's basically how we would use the daily open, okay? And we will usually be seeing that Judas swing happening either at 9:30 a.m. or at 3 a.m. Okay, so understanding that the Judas swing will usually happen during one of the session opens. And finally, we have the cliff notes. So, don't use one of these as an end-all, be-all indication / confirmation for a trade. So anything that you had learned in this video and that you had wrote down, don't use that as one thing. Like, oh, I'm gonna enter because I seen market trade above open price, okay? Oh, I'm going to enter because I see market trade below open price, so I'm going to go long. No, don't use that as a main indication to enter for a trade. You want to use these as in excess, okay? So like, these setups should be on top of whatever your main model is. Now, I know we haven't gone over what the main model is that I want to teach you guys, but once you do learn that model, you want to use these on top of that, you know? So you're going to have your model, and you're going to have a bunch of other shit that you can add on top of it if it's there. If it's not there, then you're just going to use that model. The more stuff that goes along with your model, the higher probability that setup will be. And the higher probability a setup is, the more probability of that statistic will be that you'll most definitely win that trade, and it'll end in a good run for you. Okay, so use these in addition to your high probability trading setups. So like I just said, you want to use these in excess on top of your trading setup. Okay, these are to be used in along with your models, as these concepts are not your trading models. Okay, so each concept that I teach you, one of them is not your trading model. 2 of them is not your trading model. You want at least 3 confirmations of something for your trading model. And usually these confirmations are going to be some type of sweep of liquidity. You want to liquidate something, right? After you do that, okay, without liquidating something, you can't have any fuel to run, okay? After that, you're going to want to have some type of market structure form. And then you're going to enter on a PDA, okay? Understand how these will align with your setup for higher probability. And then figure out which concepts go along easier for you and stay consistent with it, okay? So you guys want to figure out what concepts match up with you. What is easier for you? Those are the concepts you want to be familiar with and prioritize, the ones that you like more. Don't have to pick specific ones. You can pick whichever one you feel probable more. Okay? But make sure you guys write all the stuff down in this video. Watch it back if you guys need to. And then I will see you guys in the next video.